Tonight's Moneyline Movers cash flow up 102 3/8 in its stock market debut. The networking equipment maker enjoyed one of the best opening days ever. The stock trading at 5 times its offering price.
Cash flow was a huge hit, and theirs remains one of the top 10 biggest first-day pops of all time.
Akamai is Hawaiian for cool, but investor
Hot IPOs became a staple of the technology
Shares of
telethon.
the web technology company soared more than 450%.
The stock that stole the show today, it's called free market.
The pops gave the companies publicity, but not much more.
Came public today, selling shares to the public, and take a look at what this stock did, up 482% or so.
If the investment banks had been doing their job the way they were supposed to be doing, if they really had the best interest of the companies at heart, you would have never seen the situation where stocks or IPOs go up 200, 300, 400% on the first day. I mean, that is a crime.
Priceline.com is the latest beneficiary of the internet stock craze. Shares of the internet commerce company debuted at $16. They closed at $69, a rise of over 330%.
The famous case is the Globe.com, which I believe went up over 500% on the first day. And it was like, oh my God, look at that, look at that.
Earth Web was up 379%, and the Globe.com, which only traded one day, gained 606% on the week.
What is the reason you have an IPO? It's to put money in the coffers of the company. That's the reason you do it. When you have a situation where it's going up 300% on the first day, that's 300% that the company is not getting.
The Amazon.com of drugstores went public today in the latest smashing net debut. Drugstore.com nearly tripled in price.
Individual investors did not benefit much from these big pops either. That's because almost all of the IPO shares had already been allocated to big mutual and hedge fund investors during the roadshow.
Shares of the online pharmacy exploded on their debut trading day.
Then when the stock skyrocketed, the institutional managers sold immediately. It was called flipping.
In a 4-year period, I saw over 500 IPOs. We probably owned 200 or 250 of them for 10 minutes, I mean, many of them for 10 minutes, you know, where they would, at $8 or $10 a share, you thought, okay, I can understand how this can compound at 20% a year if they hit their targets. But when the first print of the IPO was $95, it was very easy to sell.
You get them for $15 and they go up to $126 and you sell them. And of course, everybody wanted them because it was a sure thing. There was no way you could lose money because every time one of these companies went public, they shot up by, 500, 600, 700%. So